Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Friday, August 18th, 2023. Before I click through the charts, as usual, just want to encourage you to please click like if you haven't already, and subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this. Daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% swings on those underlying stocks. We also offer a 5-day free trial up front. So if you sign up for wickedstocks.com, you've got 5 days to check everything out that I just mentioned to see if you like it. And if you don't, you can bow out at no cost to you whatsoever. But I suspect you'll stick around once you see all the good stuff that we offer on a daily and weekly basis. Now for the daily Tesla report. Let's jump to the charts. Just to backtrack a little bit, mentioning how a little over a month ago, and for the better part of a month, we were testing this targeted channel top at 299.81. We even pushed through it substantially about a month ago before collapsing back later that week. This was considered a 2 to 3 month objective when we settled above the 176.78 channel top about 3 months ago. As it turns out, the 299.81 formation did contain buying pressures longer term being a 2 to 3 month high, and that is essentially what has occurred. And I've mentioned how once we test the 299.81 level, you cannot discount the possibility for the market to give it all the way back to channel support, which is presently on the weekly chart at 211.70. You can see to the far right here. And on the daily chart, I'll just jump to the image here, is at 213.40. So 213.40 today marks the beginning of a significant range of support on the weekly chart down to 211.70 that can absorb selling through September and perhaps even through the rest of the year. We can stabilize once testing this area, and I'll go back to the daily chart here. We can stabilize once testing the 213.40 down to 211.70 region, and we probably will test this area today. It can absorb selling through September, even the rest of the year, and from here we can rally back to the channel top that we still see now this week at 299.81 and climbing every week. So that is the dynamic. If we could hold inside this channel structure through the rest of the year, perhaps it will take 2 to 3 months to rally back to 299.81. Now, if we do, and I'll just show the weekly chart here, if we settle today at 209.58 or lower, which is a 1% violation of 211.70, we have to keep that 1% violation threshold in mind for longer-term line studies. And this line study goes back to the January low, so it's a solid 7-8 months in the making. If we settle at 209.58 or lower today, that is a Friday, last day of the week, then we continue south over the next few weeks into the 170s. We've got a combination, this former long-term channel top and this rising 2/3 speed line in the 170s. I'll give you those exact locations on a day-to-day basis through next week. If we happen to settle today below 211.70 by the 1% margin, once again to 209.58 settlement or lower today would indicate the upper 170s over the next 2 to 3 weeks. And so, let me backtrack a little bit, and we'll go back to the daily chart here. If you remember, a couple of weeks ago, we closed below this rising 1/3 speed line that is now at 255.48, and that clearly indicated this rising channel bottom at 213.40 as a 2 to 3 week downside objective. We're about 1, 2, 3, 4, 5, 1, 2, about a week and a half actually into it. So inside of 2 weeks, we'll probably wind up testing our targeted support. And so once we test 213.40, we can rally up into the mid 250s and climbing within 2 to 3 weeks, and over the next couple of months into the, I'm just going to call it the low 300 area, because 299.81 is climbing gradually. And I think that kind of rounds out the big picture. Let's talk about the day itself. Actually, I'll just leave on this chart here. 226.74, nothing more than Thursday's high. It is the move low so far. And so even if we break Thursday's low of 218.83 and come rallying back to push through 226.74. Either way you cut it, 226.74 is a pivot point in its own right today to the upside. And if we push above 226.74, 232.71 is likely. That is that trend line that goes back about a month that's performed pretty well in containing highs and lows over the course of the last week and a half. It can contain daily buying pressures. If we close above 232.71, that does pivot the market upward into next week. I think by the end of next week, if we close today above 232.71, we should push on up into the mid 250s. I'll get to that in a moment. But until then, holding below 226.74 will keep 213.40 in reach. Yes, we still have 217.65. That is a level that we missed by just a bit on Thursday. I have it as a minor point. I'm not gonna put a lot of emphasis on it right now. I really want to give this market breathing room and make way for 213.40 down to once again 211.70, which is the same formation on the weekly chart, 211.70, the daily chart, 213.40. So this is really the way I think it looks today. Yes, we've got 217.65 as a minor point, and you can say that if we break 217.65, 213.40 in reach, that's for aggressive intraday day traders who scalp 1 to 2, 3-point moves throughout the day. But in terms of the trade of the day, 213.40 down to 211.70 is your bottom picking territory for day traders. It's also your bottom picking territory for 3 to 5 day swing traders, back up to 232.71. It's also your bottom picking territory for 2 to 3 week swing traders, back up to 255.48. And your sort of investment territory, or for near-term investors, 2 to 3 month position traders are buying 211.70 to 213.40 in anticipation of bullish rotation back into the low 300 area within 2 to 3 months of testing 211.70. Once again, I will just emphasize that if we settle today below 211.70 by that 1% margin, I don't know where I have it. Here it is. That's a 209.58 settlement today, Friday, or lower. We continue south into the 170s over the next few weeks. If you've done nothing and we close at 209.58 today or lower, you may reach for 175 out of the money puts that don't expire for at least a month. Until then, this is your bottom picking territory. I don't know how many times, I know repetition is very important when it comes to this stuff. I'm driving home the point that we are now approaching our targeted support, and that support beginning at 213.40 and ending at 211.70, able to contain selling through the rest of the year. So as we test this area, if you're an options trader, you may reach for 255 or 260 out of the money calls that don't expire for at least a month, because that becomes kind of a 2 to 3 week target. Or if you're a big picture options trader, you may reach for 300 or 305 out of the money calls that don't expire for at least 6 months, because that's more of a 2 to 3 month objective. Let's talk about the upside here. I'm going to zoom in here a little bit and talk about, if we push through 226.74, 232.71 is likely where we can place a daily high. If we settle today above 232.71, 245.31, with that kind of volatility, likely